Hi Giuseppe.
Hi Lenia.
How are you?
Good.
Nice. Thank you so much for spending the next 20 minutes with me. Thank you for having me in this beautiful office. As you say, it's an old farmhouse converted into an office.
Yeah.
And I can already feel the peace and the serenity here. I believe it can let you concentrate and focus more here rather than a regular office, doesn't it?
Yeah, I think we kept the headquarters in Serramanna in the countryside. Ease of work, and also because we wanted to contribute to the economy of this little town. And so yes, I'm pretty proud that we're still around and kicking.
Yes. Nice. Okay, so you are one of the founders of Sardex, right? I've seen this company featured in many magazines and publications, and very important ones, such as Wall Street Journal, Financial Times, Forbes, CBS, and you've been mentioned by highly reputable economists all over the world. This is amazing. Well done, guys.
Yeah,
really good.
It's a big responsibility, I would say, but yeah, thanks.
No worries. I'm here for the main reason to understand how this way of buying and selling things is, in a way, disrupting and impacting the banking sector. But let's start to understand how it really works.
So, in a nutshell, Sardex facilitates trading between mainly companies, now workers and consumers, who have productive capacity. That means they have something that the common market, the normal market, is not absorbing. So it might be empty hotel rooms, it might be your time as a dentist that's not booked, it might be your English classes that's half full. Basically any company apart from weapons dealers and very dangerous toxic pharma industry are not allowed in the network, but apart from that, basically 99% of companies can participate. And when they do participate, they are sharing their capacity, their abilities with each other. By entering the network, they sign up a subscription and agree to a yearly volume that they commit to the network. So the first step is a commitment to the rest of the network that's made up of companies. And based on this commitment, which is, as I was saying before, for the hotel might be 10,000 euro worth of unsold rooms or holiday packages. This concept of ability is the power behind the currency, or actually, to be more precise, the credit unit, because Sardex is a credit unit that is one-to-one pegged with the euro, but is not exchangeable for euros, and can only be spent in the network, and can only be created by those who partake in the network. Those who participate in the network create Sardex when they trade. So, for example, the dentist commit to 5,000 euro worth of my services, and the platform will calculate a credit line based on this productive capacity and the demand that there is in the network for that good or service offered. Let's say that the dentist gets a credit line of 1,000 euro, and the next day he goes out and buys dinner for his fiancée, I don't know, and pays in Sardex. Now, at that moment, his account goes negative from 0 to, let's say, 50, and those 50 he just paid have been effectively created by him at the moment of trade. All of this happens without interest. Wow. And this is, as I would say, roots that stem from city-states and the first forms of writing, actually the clay tablet that you can see at the Archaeological Museum You see the clay tablet from Mesopotamia, and well, what they are records of agreements and debts. What we chose as base of our economic model is to get rid of interest, and that was meant also to distinguish the nature of Sardex as credit-based units of account, as opposed to normal money, which is debt-based, and it is generally comes with interest attached.
So it sounds like Sardex is revolutionizing the way businesses and consumers buy and sell things in Italy, right?
Yeah.
Do you think this way means something for the banking sector? How do you think the banks see Sardex? Perhaps a threat, for example?
First off, I wouldn't think they would see us as a threat, since we have on board as shareholders one banking foundation and also the technology arm of a bank, plus other investors, some institutional and some from the venture industry. And I don't really think it's a matter of conflict or even competition, because the nature of what we do is very different.
Sure.
We are trying to help companies with their working capital needs regardless of financial market conditions and regardless of political conditioning that affects rates. And again, do you know any bank who can work without interest? I don't know any. Well, what we do works exactly because there is no interest. And in that sense, I would not see us as a threat. I see us as servicing another entity that's actually providing services to the core customer of banks, which are SMEs. But the economy should not just rely on one particular form of money or one particular form of credit. And that is debatable, and many bankers might disagree or frown. But I think it's quite hard to argue that banking as it exists and that it is configured right now is perfectly functional, works as well as a wheel. A wheel is a human invention that is round and it just rolls. It just works. Now, if we think about money and banking, well, I don't think we figure out the equivalent of the wheel.
No.
It's more like a squared wheel, where every once in a while you've got crisis, you've got to ask the help of somebody's bigger, either the central bank or the state. None of what we do depends on these entities. We and the success of Sardex is truly connected to the way businesses and people embraces it. And it's purely voluntary, and that's why I think that is the most revolutionary part of it, that it's a real economy based system that has no interest, that is based on subscriptions rather than fee extraction. So we try to be generative rather than extractive. And we try to enable connections from the bottom up, not top down.
That's really interesting. And what I was saying about the revolutionizing bit of the banking sector is because banks, if we were to lend money to SMEs, as you were saying, they will be charging interest. Not lending money, they not gain any interest, so there won't be any money gaining from their side. And that's why probably the bank sees you as a little bit of as a threat, because in this local economy, they might be saying, oh, I can lend you money. No, actually, I have Sardex that can lend me credit. And in that way, you're kind of like a little bit making a little bit of a noise.
Yes, might be, but there's another problem. Banks, when they rate companies, they have to follow certain rating standards, which we are free to follow or not. Mm-hmm. They have to, right. Because that's regulation. Sure. Basel III, Basel IV, etc., etc. And sometimes, in Sardinia, that's the case, and in many, I would say, peripheral local economies in the Eurozone, for instance, banks do not lend. That's their big problem, that businesses might have demand. When they go and ask for a loan, well, I think the latest data I saw from the ECB, we're talking about 1 in 4 companies that gets a no. And more than 1 in 4 that gets less than what they need. For instance, we collaborate with Banca Etica, mm-hmm. and Banca Etica, together with us, has financed a couple of our Sardex participants who needed euros, but they couldn't get as much euros as they needed. So there we built something that we call a blended loan, where you have a portion in normal money and the remainder, around 20-30%, that is in community currency, in Sardex. So you see, anything can actually work together. Point is that in our case, we're trying to be as generative as possible, and we are not focused on maximize or let's say solely on maximizing profit. For us, purpose comes before profit, and I think also people should come before price.
Absolutely,
I know. I don't think bankers would agree, but
totally. You're a community-based and purpose-based business, which is actually what customers want today, in today's digital world. There has been so many years where banks have wrecked us, mm-hmm. As businesses and consumers, with the interest and commissions, shady commissions, and
hidden fees.
Absolutely, I can't agree more with that. And in this digital world, I'm actually asking myself, what is the meaning of the banks today? Because there is such a big revolution with the banking sector at the moment. As you can probably know, there has been a massive boom on neobanks, digital and complementary currencies, and peer-to-peer lending and crowdfunding over the last decade, right? So what is the meaning of the banks today? It's a nice question. They are failing to provide the basics of the customer service and the service to their customers. Customers are so fed up with the service they get from them, right? Yeah. So it's unbelievable, the revolution that we are seeing today, something that we wouldn't have seen 20 years ago, for example, because we would trust the banks so much that we wouldn't have seen it. Yeah,
I think there's maybe another angle to what you're saying. On the one hand, probably trust in the financial sector was higher
mm-hmm.
back then. Yeah. Technology wasn't as I would say developer friendly, and also probably we ought to, as a society, not just stop at rethinking the role of banks and the meaning of the word banking, mm-hmm. but I would go further. I think we are actually in need of something bigger as societies, and developed society in particular, because we are definitely seeing across the developed world growth rates that are minimal, but even in rich countries, if you measure the happiness level, you realize that really money doesn't make people happy.
No.
And sometimes past a certain threshold, it's really irrelevant. So I would probably recall Gramsci and the bit where he was saying that between two old paradigms and new paradigms is always an interesting but dangerous times, because that's generally when monsters arise. So we gotta be probably very careful. We are not trying to become a monster, but it's really that I think societies are at a crossroad or somehow in the middle of a changing process. And when you have these sort of moments, there are also power relations that come into play. And as much as the financial sector might not be trusted as before, the power and the legal arrangements around banking make competition or alternatives or anything that's not fairly standard very difficult to set up. We are one good exception, I would say. We've developed our business model to be exempt from regulation. We chose some features that we were describing on purpose to differentiate ourselves deeply from old models and old ways of understanding the economy. I think that we ought to, as society, not be trapped and definitely not be limited between what I might say a choice between big finance and big tech.
Yes.
I think we ought to have a third pillar, and that is community-based finance, because communities in the end are those who prosper or suffer when big banks or big tech do their mistakes. Think, Lehman Brothers, and think Facebook, and now Facebook going into crypto.
Right.
I'd rather see a world of careful communities that are sufficiently resilient and not just efficient, because banks and banking being driven, it is definitely driven by efficiency. But when a system, a complex system, gets too efficient, might also be vulnerable to black swan events or to say like changing environments. And by not being resilient, because only one way should work, it ends up being very fragile.
For centuries, banks only concentrated on making money and profits. That's all, not actually serving customers, right? So I'm glad that you actually concentrate, that you guys at Sardex, as a business, as a community, you concentrate on a community, on trust, on values, right? This is what customers want today, basically. And the good thing today is that technology is giving the opportunity for people like you to create opportunities and to create opportunities for communities, for us as well. So there is so much choice right now in the market, so many different alternatives, ways of paying, storing money and borrowing money from other sources, that we have the power.
Yeah, that's definitely the possibility for a big and bigger shift.
Yes.
It's not, I don't think it will only dictated by the preferences of us people. As you know, banking is the most regulated business. So generally people complain a lot about banks and their dealings. But banks can only operate within certain parameters that are set by lawmakers. It's a strange position, that of banks, because they are providing a public service. Credit is truly something public, but they are generally for-profit enterprises, and this is where it gets to the conflict between the for-profit versus the original purpose, why they were set up.
The other day, for example, I was reading an article about the banking sector, and this article mentioned that by 2025, nearly 2 billion people will have their banking experience on the phone, and 80% of them will never walk in a bank branch again. So it means that everything now is basically controlled by our phone and our technology. So technology is shifting the power so much.
Now you're making me think about the danger of relying only or mostly on technology. There's a big, huge push towards branchless and branchless banking that definitely is like digital banking. We do not have branch, but we are not a bank. But what we do care, and that is going slowly and fading away in commercial banking, is the relation with our customers and the quality of relations between the network and the community that works with us. I'm really that is something I worry quite often, and that is the society going cashless. I am not, even though like everything we do is digital, but I am very worried about the cashless trend. It's definitely worrying for two reasons to me mainly. One is once we go cashless, we are relying 100% of bank mediated credit. And that is one. And the second, a cashless economy is, on a human rights level, potentially very scary. Now, imagine if you have no access to cash, and by cash I really mean paper that works offline regardless of electricity. And what happens if there is an outage or a hacker takeover of the system that is not perfect? It's been designed and built by humans, so it has flaws. So I'd rather hope that we as societies do not ditch paper-based financial instrument just because paper is old. Look at this shiny phone, because there's a hidden cage behind the phone.
Yes.
And there's an hidden freedom in being able to transact freely and in a completely private manner. There's the systemic issue and also the personal issue of financial privacy. Now, people argue there is no such thing as financial privacy today. I might agree, but I think it still should be a human right as it is freedom of speech. We do claim freedom of speech as a human right. We don't have freedom of transaction.
You think more for the society, which is good. You're very based on community and the society values.
Yeah, I don't know if this is good or bad. Somebody might argue that that's bad for business.
No, it's just your view.
But I believe it's actually not immediately realized, but the game of staying human, of building relations
Yes.
community by community, of empowering SMEs, workers and consumers to trade regardless of the availability of official regulated forms of currency, credit and money, which are all different things, but nobody cares. I think it's important.
I've seen there are various complementary currencies of this kind in Europe. And I have to be honest, I didn't know about this until Sardex became such a big thing in Italy and Sardinia. How do you see this concept evolving over the next decade?
I'm working very hard, and I've been working very hard trying to address technical and social scalability issues community currencies have. And I believe we're pretty close to a model that we believe could be socially adoptable worldwide. Nice. In any community, but it is gonna be dependent on the availability of the internet. That's a big limitation that we should strive to overcome. But
well, it's getting better and better. Hopefully, fingers crossed.
That's exactly, and I see it going forward as probably the most reasonable option, as I was saying, between big finance and big tech. As this sort of third way that's human, that's community based, still has some elements of banking, some elements of technology, but is purpose driven and is impact driven, and then secondly, of course, it is profit driven. But it has, I think purpose and impact have to come first, and well, of course, caring for the success of those who participate is vital.
Sure.
Then going forward, another thing that I would love to help bring about is more and more community accountability, mutually reinforcing mechanism that make community currency basically stand the test of time. Few community currency last more than 2 years. Okay. We are an exception in that. Some don't even start. Like there's plenty of announcement of like, we're launching this and that. We personally never did a launch. We first worked 3 years after we said, we exist.
I agree with that.
And
yes. There are lots of companies that actually claim we're launching this new product, but they haven't actually tested the availability of the product, doesn't it?
Exactly. And so being close to the market has helped us, will continue to help us, but we also have to be out there in terms of thinking, because if we keep on the same rule book, we won't go anywhere. And it's beyond a nice mobile app. It is a nice mobile app, but it has to have a soul. It has to have a drive that goes behind dollars in the eyes.
I love this view, and I love your values, guys. Seriously, I have a lot of admiration for what you're saying right now. And I'd like to end up this very interesting topic, which I don't want to take too much of your time, but I'd like to end up with a nice analogy that someone mentioned in a Forbes article that I was reading the other day. I'd like to read it to you. It's Laura Ortiz Mortimer. It's a CEO of an investment firm in Mexico. The way fintech is designed, it often puts more people in debt. Debt is like poison. Sardex turned that poison into an antidote.
I mean, she said it.
She did.
I mean, it's actually bigger than that, not in our term. It's the poison part that's very hard, and I feel totally flattered by, and we should all like the whole
Yeah.
company and community should feel flattered. That she understood that community-based credit is an antidote to interest-bearing, never-ending that shackles, that relations. She was spot on that.
Absolutely.
So thanks a lot to Laura Ortiz and to you for the questions.
It was really good. I really like this analogy that summarizes very well what we've been talking so far in this interview, but summarizes very well the actual heart of your company, right? Which I'm so glad to be here, and thank you so much for spending this time with me, for inviting me, and for having me.
It's been a pleasure, and thanks to you for coming.
Thank you, Giuseppe.
It's been a pleasure.
Thank you so much, everyone, for tuning in. If you have any questions, please let us know. We'll be happy to answer any of your questions. Thank you.